Welcome. It's a good day and it's a nice time to be here. We are going to be looking very quickly on what is about to happen for the coming week. And it's going to be a simple market structure top-down analysis, trying to keep it very, very simple. Where you start from, weekly time frame, you drop down to 1 hour daily time frame, you drop down to 4 hours time frame. You see the market direction. Then as a simple beginner, you can choose any of the entry strategies and pick up your entries from a smaller time frame, 1 hour, 30 minutes, or even 15 minutes, depending on what you choose. Okay, but the most important part of this session today is a top-down analysis. So I'm going to share my screen and take you through. And we are going to be starting with gold. No, silver. Let's start with silver. And here we are on the weekly time frame. Let's set the ground rule for this analysis. Step one. Step one will be weekly market direction. So first of all, we have to establish the weekly market direction for, that's not direction, spelling is not correct, direction. We need to first of all establish the weekly market direction for any asset we are looking for. Top-down analysis. Secondly, after setting the weekly market direction, we are going to look for areas of imbalance. First, we establish the weekly market direction. Second, we look for the area of imbalance and market. Yeah? Step three. Drop down to lower time frame to look for structure, for market structure. So this is all we are going to do. Drop down to lower time frame to look for market structure. A breakup structure in line with our imbalance, in line with our weekly market direction, is going to be a very nice setup. So we want to look at these 3 steps, do the same thing for all the assets we have. Maybe I have to drop this a little bit more to 11. Yeah, 3 steps. Where do I drop it? Here? I drop it here. Beautiful. So here we are on the weekly market, on the weekly chart for XAG, which is silver. So how do we run this? We'll pick up weekly charts for XAG. We're going to pick up the horizontal ray line to mark the highest point we can find in the market from our chart. Keeping it simple, nothing difficult. This is the entire chart. The highest point on this chart is here, 30.0. We're going to mark the lowest point we can find on this chart, which is here. So that is our weekly range from here to here. So from the left-hand side to the right-hand side, it simply shows us that market is bullish. That's what we can see. So let's look at the move of the market. It started from here, it went a higher high, a lower high, another higher high, a lower high, another higher high, a lower high. Then we got this one. So this is an uptrend until the price breaks this. Okay, there's a zone here. We want to bring this zone here. There is a created, these are internal structure, but let me just mark this point also. This is a lower high than this. So, and this is a sign of a change. But unfortunately, after this lower high was printed, price failed to break this low, right? So we still have a higher low. So we can still mark it and go this way and go this way again. So until price breaks this last low, we still have a bullish move on gold. So I'm going to set my horizontal ray right there. We are still bullish on gold. So we established that the market direction on gold is bullish. As a matter of fact, we are not looking at this line anymore. We are looking at this line. If price breaks this 22, we are looking downwards. If price breaks 30, we are still going upward. But the direction is bullish, established. Now what do? We drop down to the lower time frame, which is the daily time frame. On the daily time frame, what are we going to be doing? We're still going to look, okay, we go back a little bit one more time to look at area of imbalance. As price created imbalance, oh yes, this is where price is at currently. And the week has ended already, so we have areas of imbalance here. From the upside, this area of imbalance here, let me take this guy out. We also have area of imbalance right here to go bullish. Imbalance also here to go bullish. Okay, I would mark this one. I think I would prefer to use this to mark area of imbalance on the weekly time frame here. So this is the best place I would like to mark the weekly imbalance. Weekly imbalance. Yep. Weekly imbalance. Yes. Well marked, correct. Is there any other imbalance again? No other imbalance. We have another block here that broke this structure, but we're not interested in this for the higher time frame right now. We're just trying to keep it simple. We identify the market direction is bullish. So we want to be on the side of the market direction, bullish. What would be the best place to set our area of imbalance, up or down? Definitely down, because we want to go upward. If the price is bullish, we would like to be going upwards. Yeah. So we're done with this. We go to the next time frame, which is the area of the daily time frame. On the daily time frame, we will be looking for the same thing. Remember the rule. We have 3 steps. Always remember it. 3 steps. Weekly market direction is bullish. Step 2, area of imbalance. We marked it from the weekly time frame. So now we want to get drop down to the lower time frame to look for market structure. What is happening on the lower time frame, daily time frame, in terms of structure? Since the weekly is bullish and we would like to go bullish, and we're looking for the best market entry opportunity for this asset, XAUUSD. And from the area of imbalance where we marked on weekly time frame, we can clearly see is the discount area. Yeah. So if we put a Fibonacci from here to here, you will see clearly that it's a discount area below 50, below 678, around 0.618, around 786 and 886 area. So premium entry area for a buy on silver. Okay. The next thing we want to do here is here at daily, we want to look at the market structure. What is happening also, we look at it from here. Price started moving from here, area of, I'm seeing a double bottom printed here. Price for broke this level, came down, created a higher low, went up, created a higher high. This higher high is still in line with this. It didn't break it. It came down here, created a higher low, went up and printed a higher high here. So the next thing we want to see is price coming down. Coming down, of course, correct with forms of correction, kind of like up, down, up, down. It's not going to come down straight. We're not expecting it to come down straight until we get to area of imbalance here, weekly imbalance here. We move up from the weekly time frame, expecting the price to move up like this. This is from the weekly perspective. But here at the daily time frame, we still need to mark area of imbalance, right? So if you look clearly at the chart, you look at this area where price broke this structure. This move is a break of structure to the upside. So if you look at this move, we can mark this place here as the swing low that took out this high. There was a high here that was taken out by this move nicely. So if price come back to that area, it's going to be an area again for us to go bullish. So we are going to mark area of imbalance there. Nice imbalance here waiting in the market. Price come and fill this place and go up again. So we mark another area of imbalance from here to here. So these are our reference, our zone. These are our reference, our range for the daily range. So I can mark this as daily support. So daily support. This is weekly support. Weekly support. So we have a daily support, we have a weekly support. So we want to buy around the support area, we want to sell around the resistance area, right? So the support is the demand zone, area of demand zone. The resistance area is area of supply zone. So we'll look at this from here to here now. That's our major interest now for the daily. Bring back this again, don't forget this. I would like to even copy this so we paste it on the next assets. Yeah. Okay, so where are we now? We've gotten an area of imbalance from the daily. Yes, we got it. So we look for structure. There's a break here. There is nothing here else, nothing else here. We can't find anything else here between this and this. We can't find anything. There is another imbalance here, but we will not pay attention to that because there's another imbalance here. We will not pay attention to this because it's not in the area of discounts. Okay, it's actually around the 618. There's an area here, 0.618, around 0.618, below 0.50. So it's still also a valid area of imbalance. We are looking at it. Price tapped into it already, and price is likely to come there as well again. To tap in from here, we'll look for a buy. And that's it. So these are two areas we've marked. We'll go down again to area of 4 hours time frame to drop down to look for what? Let's see, step 3, keeping it simple. Step 3, we drop down to look for the market structure. Okay, so here we are on 4 hours time frame. Our interest now is this range from this swing low to this swing high. So we want price to drop into our area of interest here and here. I really like the lower one, but then we'll see how it goes. This is the setup. This is the market direction now. So from anywhere from here, we are looking to go up. Anywhere from here, we are looking to go up all the way back to the top and even breaking it, right? So that is the plan. So we want to trade in line with the trend. The trend is bullish, so we want to stay bullish. Yeah, is it possible for us to trade against the trend, to sell this market? Yes, of course, it's possible to sell this market, but it's more safer to be in line with the trend, right? So, of course, we know it's a possibility for this price to drop down to get in here. But of course, it's not going to do that directly. Remember, I said it's going to do that correctively. Most of the time, from my experience, you'll see it coming down correctively like this to drop into this zone here. When it gets here, we'll drop down again to look for market structure shifts. Then we take it to the upside. So this is what we are looking at. And when we are doing this, our stop loss is going to be directly under this move. This move that took price to the top side was sponsored by this candle here. This candle here, this area, sponsored this move that took out price from this place. So if price comes back here and we see a shift in market structure, we enter we take our buy from any of the same thing. We take our buy from any of the imbalance area, supply zone, support area, whatever our entry strategy is, or breakout strategy. Once we take our buy from that place, we are taking it all the way to the top. The first take profit, of course, is going to be the first structure to the left-hand side, the resistance area. Second one, third one, we go up all the way till we get in here. It's a very much safer trade than trading against the trend. What I'm seeing here is over 27,000 pips to the upside. If that plays out, this is really interesting. So let me take all these out now. All right. Let's keep it simple so we can go to the next asset very quickly. If you have any comment, you want to drop any comment, you want to drop any question, you can drop it on the chat box. I'm actually looking at the chat box. You can also, I have a direct link there where you can send in questions directly to me. I can answer your question. So we're looking at this again. The structure on the 4 hours time frame shows clearly how price left this zone, broke a structure here, and pushed to the upside. So we're going to expand and draw this again, starting from here, starting from this area already marked. This is a daily imbalance. There's a daily imbalance here. And there's another block here that sponsored the movement, but we're interested more in this one, this red one. It's a weak order block, but I think it's still very good. It's a zone. We can call it a zone now. There's a zone here, 4 hours zone here, which is coinciding with the daily imbalance area. So, and when price started from here, we had the move this way. First move from here to this place, deep down again. There's an imbalance here that was filled up, of course, so we have to draw that. Let's say this is our second move. Down to this place, quite tricky, a choppy area here. Then the final move we got there. So at the break of this area, the next target will be this zone. And this zone will be our best zone for us to begin to look for a position to the upside and continuation, right, on the higher time frame. So there is a very important area here that should be broken, which happens to be this. This has to be broken. Once this is broken, we can call it here is an area, completely is an area. From here to here is an area. So maybe I'll just drop lines there. Once that area is broken, we are looking out for price to, if it breaks, retest, we go down. So we can actually trade a counter trend there. We can trade a counter trend there, but the best thing to do is to wait for price to come here directly, and then we take it to the upside. This is our first move from here. We want to also see structure formed here on lower time frame, M1, M30, M15 before we go to the upside. Second option is to wait for price to enter the second area of imbalance, which is this. These are the two areas we want to buy this asset from. 4 hours time frame. We'll stay here and keep it simple. This is it about the 4 hours time frame on silver. So I'm going to quickly go to another asset, which is the GBPUSD. GBPUSD, here we are on the weekly time frame now. Weekly time frame. Keeping it simple, what do we see? The most recent move in the weekly time frame started from here. I think we should mark it. This is the highest place we can see. This is the lowest we can see. The lowest we can see from this most recent market chart. Okay. Look at the move from here to here, drop down, went up again, drop here, lower high, and higher low. The highest of all, the swing high, change in market structure. We notice a change in market structure here. Pull back to this other area below the high of this. So here we can say officially there is a change in market structure on the weekly time frame. So from here, we can't say GBPUSD is bullish anymore. From what we see here, clearly GBPUSD is bearish. It's clear. So our concern now is the direction of this market is bearish. So let's come here and put our simple steps, top-down analysis. First, we conclude on where the market is going, looking at the flow of the market on the weekly time frame. The market broke structure from this side, pulled back and create a lower high after break of structure. This area here is called a change of character. So we normally write CHOCH here on the weekly time frame, but we don't need this now, so I'll take it out. But just to show you that there was a change of character, we are now bearish on the weekly time frame. So if we are bearish on the weekly time frame, our attention is sell. Our attention is sell. So we go to the daily time frame to see what's happening. We want an alignment of market direction. So this is the highest point on the daily we can see. This is the highest point we can see, and this is the lowest point we can find. So our attention is sell. Weekly direction shows us a change of character, GBPUSD sell. So the tide of that river from the weekly is a sell move. The tide from the daily now, we are going to look for sell opportunity. Market moving massively here on a red. You can see how it moved. Then market changed structure After this was created, in fact, this was the last high on that move that was created. A swing low was created here. There was a big break of structure here. So this was where the market shifted from. After this low was created, no other low was formed anymore in the markets. No other low was formed anywhere in the markets. This last red candle sponsored the movement that broke this structure here. So from here, we got a new direction to the upside, which is against the new trend that is a down move. So that direction started this way, higher high, lower high, higher high, lower high, higher high, lower high, higher high. This is almost an equal high, or we call it a break. It's not really clear. Now not able to form a higher high. The entire area here is choppy, but we're going to figure it out now. It's now forming a lower high, changing of market character. It's still forming a lower high. This is still lower than this previous one if you check it technically. Now it's confirmed fully that the market changed direction nose down. So at this area here is a choppy market, but some of the traders will be able to see the sell opportunity from here to join the move to the downside. We expect the move to continue. It formed a lower high. We expect it to go down low, but it couldn't. It rather formed a higher low, obeying the former structure. And to the upside, equal high, form another lower high again. A lower high was formed, now broke the structure again to the upper side. Broke the structure to the upper side. What is now happening? We see price now coming down. Break of structure to the downside. Break of structure to the downside here. The last support was broken here. A little bit of a pullback to form a lower high, higher low, lower high. Lower high. Lower high broke the structure again to the downside. So technically, we are still down. Technically, we are still down. That's the market movement. If you look at this area here that was taken out, it's a very significant area where we have a support. You can drag it backward. You can see quite a number of them there. Support, taken out massively. So we have something looking like a cup. Is it cup? No, something like Adam and Eve formation. And we see the breakout of that structure, bringing price down again in line with the trend, which is a change of character from here on the daily. So we want to see, so this is still daily time frame. On the daily time frame now, we'll pay attention to what is happening around this place in line with the trend. Before then, I want to see where this price turns from. I want to see area of imbalance. Let's go back to the weekly to see if we have any area of imbalance within that range from the upside, because we are selling. After the price broke this structure here, on its way going back, is there any area of imbalance that's yet to be filled from this move? I don't see any area of imbalance here. The market is clear, so we are good to go to the downside. So I come down again to the daily time frame to look. Is there area of imbalance that need to be filled at the upside? I'll check carefully to see if there's any area of imbalance on the daily time frame. Quite a number of them. This is one of it. This is also another tiny one was here. It was filled by this. There is nothing so far again I can see apart from this one. So this is the area of imbalance on the daily that was created after the break of the sweep of all this liquidity, the break of this structure. So we have an area of imbalance that is yet to be filled here. And we are going downward, remember. So the new range we are trading on the daily is this range. This is a high, the daily range. This is a daily high, daily resistance. So our focus is that resistance, and we are trading that range as against this daily support. This is daily support here. So, and there is an imbalance here. Oh, quite a tricky one now for the daily range. If we are trading in the direction of the trend, which is a sell, and you want to get a very nice opportunity to sell GBPUSD, where would it be? Bring your ruler and put from the resistance to the support area. Simply asking yourself, where would be the safest place to sell from? This place? No. This place? Yes. Is there any area of imbalance here? There's a tiny little one here, but has been filled from here. There's an order block here that pushed this guy to the downside. So this is an order block area 1. This is also another nice green bullish order block, which is powerful enough. You can see what happened after that candle was printed. So this is another area. This is also the best of them all. The best of them all is this one. But I don't see price going all the way back to this place in the nearest future to go and take that other block before coming down here. There is no imbalance apart from this one. Every other ones here, we see other block zone, other block zone, other block zone, imbalance. So the best place is imbalance, and we drop it down. So I'm going to go down now further to look for to mark this zone on the 4 hours where we have the order block and the imbalance, because we are going to be trading that side on the sell direction in line with the trend, the new trend that has been formed, GBPUSD. So don't forget, if I had gone backward, you'll see this order block printed here on the daily time frame. So this is now the 4 hours resistance area, the 4 hours resistance area here. And this is looking more better than what we saw previously. If I take this guy out, you will see clearly that this structure was broken here nicely with a drop of this candle, leaving area of imbalance here, which will now be coinciding with the daily imbalance that we already drew. So this the optimal trade entry area for a sell now becomes this overlapping of the daily imbalance and the 4 hours imbalance. And that would be a nice place for us to start getting our sell opportunity from, looking at discount and supply and demand, looking at discount and supply area. The best place to sell from is the area of the premium area. We sell from the premium, we buy from the discount. So we want to see price, how price can go back from where it is right now, how price can go back into this area. When price gets here, we want to see consequent encroachment, or even the tip of it is okay for us. If we see a change of character, we are good to go. That's our entry for us to go from that side down to break this zone, continue the direction of the weekly time frame. So our attention right now is here. Area of our interest for us to sell from, the safest place to sell GBPUSD is this zone where we have the daily imbalance plus the 4 hours imbalance. That will be the safest place. But anywhere around here, it's good enough to find our entries, start looking for our entries, because the structure broke from here. The structure broke from here nicely and pulled back to this zone. So I think the reactions can start coming from here to the sell side. But then the best of them all is from this zone. The best of them all is from this zone right in there. All right. With that being said, the next thing I'm going to quickly jump to so I'm going to just draw my mark. I'm looking at this area here to the downside. I'm looking at what's going to happen to the downside from here. Yep, this is the best area I'm looking out for. GBPUSD, looking out to sell GBPUSD. If I see this is the safest, right? And if we take this from here, of course, we're expecting it to come down lower. Take out that liquidity, we're expecting it to happen. So this is our expectation. Yeah, but of course, is it possible to trade the counter trend? Yes, it's possible to trade the counter trend. It is very, very possible to trade the counter trend. Some traders are going to wait for this other block area to be reached. All very good and correct. This is other block. Let me take this out and just shade it. There's another block here. If price comes there, it's one of the nicest places. A lot of traders will wait for this other block area. But I don't think we have to wait all this long. When price drives into this zone, it's safe already to start looking for sells. You want to be on the sell side for GBPUSD. So once price comes into this zone, is already above 50%, it's safe for you to start looking for a sell anywhere from 50% zone. Look for a sales from that zone, drop it down. If you see another structure again, anything above, look for a sell support. If price comes anywhere around here, you are just looking for sales. Up until this point, you are looking for sales. But once price crosses above this level, that is no more a sell structure. The structure already changed now to a buy structure. So we wait to see until the break of this guy is now a buy structure. We are buying all the way to this top. And when price gets here, is a daily resistance. We can still look for a sell structure around other block. Not there's no what's it called now? There's no area of imbalance in between. All the imbalances have been filled. So, but if price could come there, that would be a sell from the daily area. But most likely for the week, we can't expect this. I don't think this will happen. I'm seeing more of this zone happening for the week. More of these zones happen for the week. So, of course, traders who know exactly how to swim against the tide of the river can find their way to buying to the upside. And that would happen through like seeing a higher low formed. When you see a higher low formed, then you take advantage after the break of the higher low. So you can go to a smaller time frame to look for a pullback and buy to the upside until we get here. Once we get here, you can't think of buying anymore. You have to go in line with the direction of the trend. You look for a change of character. You look for change of character to the downside. The break of that change of character for smaller time frame is the best bet. You can start moving in. If you see anything like that, then we start going to the downside, right? So the safest place is to sell GBPUSD when price goes back up to premium zone on the 4 hours time frame. I'm going to stop here. Top-down analysis, very simple, keeping it complex, knowing the direction we are going for the asset. GBPUSD, our direction is bearish, sell, and we're selling from premium level. So where's our simple step 1, step 2, step 3? I'll copy it again, this one. Don't forget, this is what we are following. So you might want to take a screenshot so you can also do the same on your chart. Keeping it simple, take a screenshot, do the same for your chart, watch the video all over again. So this is what we are trading. We are still going to the downside. We are actually going to break down this guy. The plan is to still come down to break down this guy. This is the 4 hours. We are breaking this down to the downside, down, 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 down like this. So this is the intention. This is what we are expecting. Our intention is to keep going down. How many pips is that? How many pips is that? If we happen to get this from this point to the downside, that is 500 pips, 561 pips. So our intention is to keep going down. There's no reason to go up. Only going up for scalping and small moves, right? Okay, we'll go to another asset. We've done XAUUSD, we've done GBPUSD. Let's go to WTI. WTI will first of all visit the weekly time frame. We'll take out all of these structures. Where is oil going to? Very simple. Open the weekly time frame. Where's the highest place you can see? Where's the lowest place you can see in the most recent time on the weekly time frame? Keep it simple. This is the lowest place I can see. It's forming a kind of double bottom market rejecting this zone. And this is the highest place I can see. So this is our range. So from the low to the high, left to the right, it means the direction is bullish. Simple. You look from the left to the right. So the market left from support to resistance. So the price is bullish. The WTI direction is upwards. Simple. So we're looking for upwards. We have also another low that was created here. So our range is no longer going to be from here to here. Rather, our range is going to be the most recent one, from here to the most recent high, which is here. So our direction is bullish. So my price move from here to here. A break of this place, we continue going the direction upwards. We'll buy oil. A pullback to any of the imbalances, we'll look for buys. Yes. So this is now our weekly structure. Is there any imbalance? Is there any imbalance? From here to here, there's an imbalance here. On the weekly time frame, there's an imbalance here to here. That's the most recent area close to our price. This one. There's an imbalance here on the weekly time frame. So don't bother about these ones behind, because it's going to take a lot of weeks for price to come down to any of the areas here. However, I don't see any imbalance here. All the imbalances so far from all of this chart have been filled. So price have no business coming down to all of this area anymore. But the only area which have not been tapped, which have not been cleared, is this area of imbalance where we have $83 per barrel. $83 per barrel. The imbalance have just been created. Price needs to come and fill this place at least, fill this imbalance at least. And then this is nothing really to worry about. This is 87. Somebody was telling me 82. 82 is coinciding with the support of the weekly support of this guy here. But this is imbalance, then this is the last low that was printed. Yeah. So I will go to the daily time frame. I've already marked my weekly imbalance area. So the next thing is to go to the daily. So let me bring up again our three-step. Step one, weekly direction is bullish. Step two, area of imbalance, weekly marked. We still come down to drop down again to still find area of imbalance on the daily time frame. While we do that, also we mark the market structure on the daily. So take this one out. We're not looking at it. Our most area of interest now is the area closest to the market. We've already established the direction as bullish. So the last support that the market left was this one. This is the last area of support the market left before it made all this massive move. So we are going to mark it. Is the daily support. Price printed this area, dwelt on it massively. Even if you look at it historically, price really made use of it. It was an area that was broken, retested, bullish push, a little bit of pullback, bullish push. So if you take a Fibonacci to study this pattern, after this push, the pullback was less than 50. So after this push, the pullback is almost going to be less than 50. Area of 50% now gives us a very nice area to buy from. From where this push started to where it ended, the 50% of it is here, $83 per barrel. If you come lower than that, you have the 50% consequent encroachment area of imbalance for the weekly time frame. So that area will be our point of interest where price should continue moving to the upside from. And we are expecting price to take out this liquidity. There's a liquidity here at 87. It has to be taken out because price is on its way to the top. This is the weekly resistance. So price is on its way to the weekly resistance. This is daily resistance. Once it's broken, we are heading to the weekly resistance. So, but before we get there, price needs to come down to the area of imbalance we drew. Where is the area of imbalance again? Let's go to that weekly to find it. We have an area of imbalance where price needs to fill, which is this one. On the weekly. Then we drop down to the daily. That area has to be filled. Yeah, it has to be filled. Structure was broken here. Price moved up nicely. It has to come back and fill this area of imbalance. So upon filling this area of imbalance, we look for our buy to the upside. So let's drop down now to let's drop down now to 4 hours time frame. So our range, our trading range is from here to here. It's now very simple to see. What are we doing here? We're looking for the structure. Our trading range have been discovered. Our direction is bullish. We're not arguing that. We're looking at 50% trading area of this is going to be from top to bottom. Anywhere inside this weekly imbalance is our best entry for a buy move. And this is exactly what we are seeing. This is exactly what we are seeing. And do you know that all of this now will become liquidity that will be taken? Price has left this liquidity. These are now liquidity that needs to be taken. Yeah. So it's liquidity that needs to be taken. So the price will fall down to these areas, sweep this liquidity, sweep all this liquidity, dive into this area of imbalance, weekly area of imbalance here. This is the best place we're looking at buying oil. When we buy from here, it's our 2 eyes open, our 2 eyes close. You see from here, after this order was taken, there's an order block here. There's an order block here. After this order block, price never came back again. This order block. So I would want this to dip down to touch the order block. So this area here where the order block coincides with the imbalance zone is my best bet. It's my best bet. That's $83 per barrel, significant level. So from there, you see this move nicely pulling out, breakout, pull back from this high, sweep this liquidity, come back here, and we are up again. So our expectation is going to be to the downside. Now, remember, we never said it's going to drop down straight this way. It's going to do its thing. It's going to do its thing. It's going to do its thing. It's going to do whatever it's going to do. But once it drops inside our zone, we'll begin to look for structure again. What is the structure we are looking for? Breakout on the lower time frame. Then we take it up to the upside. We drop down to 1 hour, drop down to 30 minutes, drop down to 15 minutes. We must see that change of character. Then we take it up from the upside. From anywhere here, when we are in, the stop loss is not far away anymore. The stop loss is going to be small. We take a long from anywhere here. It's just going to be small, something small under that, under this guy here, under that swing. is going to be small, but then the take profit is going to be massive. The smallest we can get is here, and all this liquidity will be taken, so it's going to take us higher. We are looking at the next resistance, which is going to be the weekly resistance, which is here, $94 per barrel. So look at what we are expecting from oil. So we are expecting how many pips? So this is a more better trade for me. We're expecting 1,000, is it 1,000? 1,070 pips on oil, 1,070 pips on oil, but we want it to come down to $83 per barrel and form a structure there. A break of structure from that $2 per barrel, 15 minutes time frame, 30 minutes per time frame is good buy. It's a good place to buy, and we'll take it up from there. Is it possible to sell oil from where it is right now to bring it down to 83, 82? Yeah, it's possible. The stop loss is below this swing here. So you have to use risk management around that area, because if that market picks from there and breaks daily resistance, anything that allows this market to break daily resistance, there is nothing to hold it anymore. Hold your position until we get to this place. No matter what, hold your position. But if you are still within this range, you can be taking profit. But if the market peaks and you are in, breaks the daily resistance, see, you can just hold this thing, because it's as good as going to get to the weekly resistance area. Yeah, so the main thing is for it to take out from here to this place. The stop loss is tight, so you can always manage your risk. So this is it for oil. What's this? Take it back. This is for oil. We can take a screenshot. This is our expectation for oil. This is what we're expecting. Bullish 4 hours. So let's see how it plays out. The SL is nice, tight, and very good. Take out that zone and we are in. So the next one we're going to check is gold. We've checked silver. Let's check gold. Go back again to the weekly time frame. Weekly time frame, we have to be fast now. Our time is fast spent. We don't need to stretch our eyes. We don't need to stress ourselves. What we see in the most recent is what we mark. The all-time high, 2,433.5. We come down here. The lowest we can see is this triple bottom here. Nice one at 16,005. We're not interested about that. Where the market started left, look at this place, double top, cleared this place, picked it out, and cleared it up finally from here, this place. So we are already in a bullish move. The direction is upwards. So we want to look for area of imbalance, mark those areas of imbalance. That's where market is likely to tap into. This is one area of imbalance closest to the market. So we are still bullish. We want to maintain our bullish move. So at area of imbalance, where market feels it, there's likely going to be a rejection, like this kind of springboard. And once market breaks this zone, it turns to an inverted fair value gap. So it breaks it, it pulls back there, it drops massively to another area of imbalance. There is no area of imbalance. There is a little tiny one between this and this. You can take note of that. And the other one again is here. If it breaks that first one we drew, the next one is going to be this. Another area of imbalance. Price has to come in here, pick up this place before going back up again. I see gold going higher than where it has gone, but it has to come and fill up all these imbalances. Go back over. There's another one again here. So several areas of imbalances. It's possible for gold to come down here to $2,069. It's very, very possible, because I'm seeing an order block. If you look carefully there, this whole movement, this whole madness about the gold thing rallying to the upside started from this order block. Then the next other place, another order was loaded, was this area here. So these are two very important areas we need to look out for. This one and this one in terms of order block. So all these areas are hot zones for gold. But I will stay with the areas of imbalance. I'll forget about this guy. Since there is a fair value gap there, if it comes there, it's likely to break this guy out and come here, take this zone before we go up again. If it breaks this guy, we're coming down here, check the zone before we go up again. So we are always very careful around those zones. However, it can as well decide to come here, stay here, rally here, take off from here to the next place. You can see what it did here. When it was going up from here, it came up here. It didn't go up to 618 of that level. It just moved up again. From here, it's printed back completely to the downside. So this is another move again, similar to this one. This move, little pullback, continuation. So this move, the pullback will not be all this much. It might just be a little bit to this zone and up we go again. So let's see. So our major interest now becomes area where the latest move kicked off from. We are still on weekly time frame. We drop down to daily time frame to see. So it has been a bullish one and very, very strong bullish one. So where would be the likely areas of rest, pullbacks before we take off again? 1, 2, 3, 4. The final one is an order block area. So if you look here, you'll see clearly that there was a break here, the pullback here. So it comes back again. There are quite more numbers of areas that we have to look out for. So this is a very, very tricky asset. Very tricky asset. We have to be very careful. Another imbalance here. If there are more imbalances, let's keep marking them. All of them, mark them all. There's another one here. It's a daily imbalance. I think I should take out this and use this. Imbalance here for the daily. Quite a number of them, zones where we could buy from, but there's nothing here. All these plays are clear. So it means that price can rally down all the way from this zone to this zone. These are areas where we have imbalances, where price are likely to pick up from. This one is there again, daily. This one, nothing here. Other block is here. We'll leave it alone because of this guy. Then inside of this, we have this one. Inside of this, we have this one. Price is very, very likely to come here. Very, very likely to come here. So these are the areas we want to buy gold from. These are all the areas. We're not saying that when price comes there, you buy. No. We're saying that when price drops to any of these levels, these zones, you want to drop down to a lower time frame to look for entries around these zones, areas of imbalances. You want to look for entries to the upside around these areas, right? Okay, let's drop down further to 4 hours to look for structure. Change of character to the downside. Of course, that's what we need to bother about for now. A break of structure to the downside confirms the movement down to areas of imbalance. So a break of this confirms the movement down into this zone up to around 2271.0. A break of this confirms a movement down to this point. And any movement down to this point, I want to look for change of character to the upside. I want to be on the side of the trend, right? So number one area I want to start looking for a buy from after I break to this downside is here, the upside. Another area I want to look for buy from, H4, is this one, fair value gap. Is another area here to the upside. Another area again, I want to look for buy from this one to the upside. There's an imbalance there. Another area again, this is areas where we have overlapping. So I will focus on the overlapping area, this one. Another area again, the final one, which is this one. Anything from here is going to be a complete change. A complete change. The complete change, I will be looking for sales. Anything after this zone, we'll be looking for sales. But I don't see that happening. I think the market will be picking up from all these areas. We'll be looking for buys from all these areas. So we just stay patient, allow the market to form its structure. And when we see buys from these areas, we take it. If we don't see this area is out, we delete it. We look out for the next area. If we see a structure from this area, we take a buy from there. If we don't see, if it broke that area is taken out, we remove it. We leave it alone. We see an area from here, we take it a buy from here, take it up to the upside. This is how we keep buying this asset until we get back up. For now, we try to see the assets falling down, doing a structure, but we don't look for buys until we get to any of this area. We can look for sells by scalping them, but we don't look for buys until we get to any of these areas. Yeah, because if we get a buy, it's going to be a nice buy with a strong bullish momentum. Look at how the bullish, the green candles are looking. So if we get a very nice buy, it's going to be a nice, solid bullish push. One green candle is averagely about 200 pips. Just one bullish candle is averagely about 200 pips. So if you get a nice rejection, let's say like this to a zone like this, you already have about, from year to year, 159 pips. What about this zone when it came down here and we had a bullish move? 186 pips. What about this zone? Was there any move from this zone? Not yet. So all these areas are areas for me, the last place the market took off from, broke a structure, was here. Where market broke a structure. So my major concern would be from here to here. This is 4 hours support. H4 support. Right? So if I'm looking at discount and premium, the best place I'll take a most confident buy from is going to be anywhere below 2297. So which is number 1, number 2, number 3, number 4. Number 1, number 2, number 3. There's no 4. There's no 4 because a break of this H4 support is tantamount to a change of character. So you should be scared of buying after that level. Because that's the last structure that was broken. That looks like a major structure. All of these ones are just minor internal structures to the upside. So I'm going to leave this asset. The last one I'm going to do right now is, my time is actually up. The last one I'm going to do now is US30. So US30 weekly time frame. What's happening there? Weekly time frame, most recent time. What's happening there? We pick it up. The highest part, the highest points, the lowest points. Top-down analysis, keeping it simple. What is the flow of this move? From the left hand to the right hand side, bullish. So we're looking for buys. So do we have buys on the daily time frame? Before we go to the daily time frame, are there areas of imbalances we can mark and say price is expected to come here to fill up this place? The first one I've seen is this one on the weekly. Can I draw the ones closest to the price currently? These are the best ones to draw. So I come down here, the best area of imbalance to draw that is most relevant to the most recent time is this one. So I'll take this one out. It's not really our business for now. So if we go down to, this is a weekly imbalance, right? So this will be our weekly support because from here, we notice a significant break of weekly structure here. So we are bullish, and this is our weekly support. Weekly supports. Now, areas of imbalance within this range. This is now our range. This and this, yes, exists. We have something here. We mark it. We have something here. We mark it. We have something here again. We mark it. We have another one here again. We mark. Is there any other imbalance? Looking carefully at the chart. Nothing more. Good. There is no other imbalance on the weekly time frame. So these are the areas where we are likely to buy these assets from to the top side. Starting from here, the most closest one. So we go down to the original direction again. I repeat, is bullish. We don't want to stay on the sell side. We can scalp it, but we want to stay more on the buy side. The momentum, the energy, the flow, the buyers are more in the most recent time compared to sellers, as we can see. So we look into the entire structure again and see the daily time frame. Is there a most recent structure broken on the daily? The answer is yes. Several structure here. Look at this one. Clean breakup structure, pull back, move to the top side. So this area here, we can mark it from here. And it coincides with area of imbalance. If price take out this area and comes down to our area of imbalance, it's going to be a nice one for us to take to the upside. Yes, look at it, because we have another imbalance inside of it. Here, daily imbalance, like this. Look at under it again, we have another imbalance. Under it again, there is another imbalance. Yes. All of these areas are important areas. We have to pay attention to them. Price comes into this place. We want to look for buys at this place using a tight stop loss. We want to see a change of character picking out from this zone, out of the zone. There is also, look at this place, the daily. There's an imbalance here on the daily. Before we get to this zone, this one. I think this is the one we have to pay more interest to, because looking at this as our daily supports, if daily support is broken, before we can go down to all of those weekly imbalances. So let me write it here. Daily support. Daily support. Nicely. Once daily support is broken, this is weekly resistance. All right. We really like the way the price is coming towards the daily support, and we've seen an imbalance here. We've seen another imbalance here, coinciding with the other block. Yes. So we believe that price can dip down here or even anywhere here. So, but right now we are looking for is a market structure shift, a change of character on a lower time frame. When we get that structure within this range, we are good to go for a buy, and it's going to be a very long one. It's going to be a very long one. Look at what we are saying. These are the areas we are looking out for now. We want to see a market structure shift here right now. We have 3 areas. Daily support is here already, so I don't need to stretch this anymore. So this is our zone. What do we want to see? It can happen at any time now, beginning from where we are. It could be from here. We want to see from a kind of liquidity, sweep it down to the consequent encroachment area. Then we want to see change of character from the smaller time frame. We are in, and once we are in, all the way. This is our first move. Another move will be down, the same thing, down, happening down here. Another move will be, no, this will be the final move, except the other block here. Then the SL. So if we are taking the move, if we see the structure forming here, our SL is usually very, very tight SL. We use a very tight SL. If it happens like this, of course, this is the beginning. Our SL is going to be very, very tight, very, very tight, because this asset is quite volatile. And here we see some promises here. If we get our entry from here and we take it all the way to the top side, we're seeing, I don't really get this. Are you saying 23,000 pips? Yeah, because of the way the pips is calculated here, we'll see 23,000 pips here. It's an interesting one. So that is it. We've analyzed all of these assets. If you want more analysis, you can just send me a message on the chat box. We'll look at it together. And when this market begins to move on Monday, in 2 days' time, today is Saturday, so we'll look at it and see areas where the market is going in line with our direction. These are areas where we want to trade from. We don't want to stay on a long term in trading against the trend of the market. We want to hold the market on a long-term trade if we find the market in line with the overall trend, weekly that coincides with daily that agrees with 4 hours. If we find an entry on a smaller time frame, 15 minutes, 30 minutes, 1 hour, and we take those entries and the market is moving in that direction, we can get up to 500 pips, 400 pips, 1,000 pips, as you can see so far, even up to 20,000 pips, 1 ratio, 10 risk reward ratio. Of course, multiple times, as you can see from most of the charts, they still have other layers under them. So you might hit the SL and wait for a structure to be formed again underneath it according to the layers, and take your entries and move up to the upside. Also, traders have issues with their deposit, their capital, trading capital. They don't have enough money to take up these opportunities in the market. This is why we call for funded account. And at 10 Trade offers funded account to traders. So with as small as $100, you can have access to a capital of $3,000, and you can use a small lot size like 0.02, 0.03, and execute this trade and hold your position. If it doesn't go well and you are risking, let's say, 100 pips on 0.02, that is around 0.02 times 10 times 100. That's around $40, which is not much compared to the overall $3,000, where you have the leverage. You also have the allowance, the permission to lose up to $270 before that account is violated. So if you have an account of $10,000, which to achieve an account or to get an account, instant funded account of $10,000 on 10 Trade, you pay $300. So with that $10,000 account, you are allowed to lose up to around $600 in a day. And totally, you are allowed to lose up to around $800 in the entire account. So with that 10K account, you can risk, let's say, 0.08 or 0.09, or say, let's say, 0.1 lot size. and you are risking 50 pips on any of the position, targeting 300 pips, 400 pips, 500 pips in any of the position that is closest to where, like I see oil is very, very close to where we can get our structures for a buy. I see also Dow Jones, DJ30, Dow Jones, that's US 30. Also close to area of our entry, which is at discount. So if we see structure form here and we take up these positions and we lock in a small lot size, put a nice good risk, it is already having a good risk reward ratio. And then I see silver also, the setup is nice for silver. It's very nice for silver. It's very nice for those Jones. I see also that of GBPUSD on the sell side looks very, very nice as well. So these are assets you could get a 10K account with a small lot size and put it there and leave it there. Allow it to do its thing for the entire week and let's see how it goes. But ensure you have entered at a very nice structure, showing clearly a shift in market structure to the direction of the market, the overall direction as seen by top-down analysis. So if you do all of this and you have your funded account, the rest will be enjoyment. If you look at your account after 2 days, 3 days, you'll be excited. You'll be able to withdraw quite a lot of money compared to when you are trading a smaller account of $100, $200, $500. This market will not respect that, and you may not want to be able to use 0.01 on such markets and be able to survive it. Once $40 is gone, almost half of your money is gone, and you don't want such a kind of a thing. So drop your comments in the comment section. Reach out to me if you need to reach out to me privately. Use the link in the description and in the comment section, and I think we'll be done. Thank you so much for your time. My time is up. Have a nice time. Bye-bye.